You're watching the Retirement Halftime Show. I'm your host, Alexander Joyce, and with me today is Marquita Berry on our tax planning side of the practice. Tax planning is extremely important. You know, when we discuss the comprehensive approach of an overall plan, Marquita, it is essential to me as we built this process to partner and have people like you a part of our team. To really discuss the intricacies behind taxes, right? Not necessarily the law. I think that is, the behind the scenes, and I think that it is very important for us to know that. But for our listeners and our viewers, I think that just understanding that we are a holistic firm and really what that means. And our show, the Retirement Halftime Show, of course, the philosophy is you wouldn't play the game, the second half the same way you would the first, especially if you have the lead. And I think that what most people want to take away from this, in me interviewing you, of course, is why tax planning is such an important part of an overall financial plan. I mean, what do people, when they look at their wealth and they're counting the dollars in an economy like this where it's extremely volatile and they don't want to lose money, right? They still want to make money, of course, opportunity, if you will, but not risking their principal to do so. When we look at the tax efficiencies inside of a portfolio, what are the pieces, or what are some of the first things, if you will, from a step one? What should people consider before coming into our practice, meeting with you or a person on your team when it comes to tax planning?
For tax planning, I think that clients should consider what the overall goal is.
Sure.
With tax filing, which is what a lot of clients may have, we're looking at recorded history, things that have already happened, and it doesn't give them a chance to adjust or have great input on the outcome. So tax planning is to be ahead of what you're going to do to minimize the tax burden in the short term and the long term.
Right. And isn't that important? Because I think that what people struggle with, because, I call this, of course, our mountain concept, the Mount Everest concept, where, the first half as you're climbing that mountain, you're saving, you're being frugal, you're being conservative, you're funding your 401ks, you're doing your Roth IRAs, your self-directed IRAs, everything you can to maximize your savings. And I think that when people approach the very top of that mountain and they look out, and of course they're excited, but at the same time a little anxious, right? Because it's like, how am I going to get down? You got to spend that money and you got to make your lifestyle whole. And I think that what people really, from my experience, and of course you can speak to this from a tax perspective, but in my professional experience, I see that is one area that is very commonly ignored, where people think that, I'll get the same type of tax forms I did when I was working. W-2 employees, if you will, or maybe a Schedule C on a self-employed person. And I think that they very commonly neglect the differences between tax planning and tax filing. And so I love what you said about understanding what we're trying to do from a tax planning perspective. Of course, we want to file your taxes too, but right? I mean, don't misunderstand. But we want to make sure that we're filing that the most efficient way possible. You would agree?
I totally agree. And it's so important to understand, just break it down into three simple steps to understand where the client is. Like, what has happened before you met with us and you're taking advantage of this great tax planning service that's included for you being a client.
Right.
Where have you been according to your tax and tax profile? Where do you want to go? Which is, we take a lot of time sitting down with the client to understand where do you want to go? What is the outcome that you want? Right? And then we give them the plan to get there. And it's so amazing the differences versus, being young, earning income, you have children at home, you have these deductions and credits, they go to college. Well, moving into retirement, some of that has changed. The household composition has changed. The ways that the income come into the household have changed, and there's a tax effect on that. If I earn money from employment, is going to be very different than now I'm retired from earning employment and I'm now spending this money that's now categorized as investment income. So the money is going to have the category that it has, but my job is to continually study, get all the alerts, stay abreast of the changes, and make sure that the way it's structured fits what our client wants to do and maximize kind of where they overlap.
Let's get that conversation started today. You're watching the Retirement Halftime Show. Marquita, always a pleasure. Take that step in the right direction. Stay tuned, folks. There's more show to come.